My welcome to the stage to Peter. Many thanks for joining us today.
Thank you for the lovely introduction. Much appreciated.
You're very welcome indeed. It's always better when I do the biography rather than having to introduce yourself as well, isn't it? It's
Absolutely.
never good. Well, we'll push straight into it. We've got plenty of questions to get through, and we'll take some extra questions at the end as well. So first of all, Peter, where I think it's best to start is what exactly do you think distinguishes procurement in financial services from other industries?
That's a really important question. I'm actually quite glad we started there. So I love this question for a few reasons. One is invariably when vendors come to talk to me, they like to share with me great work they've done, great trends. But when I ask the question, how much of that is in financial services, and in particular in insurance, it tends to get very narrow. And that's not inherently a problem, but we are in a very different place than procurement within manufacturing and retail concerns. It's almost like we are the 7-year-old kid with the 17-year-old sibling, and they can go to movies that are R-rated, they can drive, they can do all kinds of cool things, and we're not necessarily there yet. So I think it's good to take a step back and think about what distinguishes the two, because then we can take a look at how we start to bring it together. I think while I'm sure that in manufacturing concerns, sourcing and procurement departments still are clamoring for more attention and more resources, it certainly feels they have a better seat at the table than we have within services. So when I think about what distinguishes it, I would say the two things that immediately drive the difference are time and direct sourcing. By time, I mean this. If you go onto Google and you simply look up the history of sourcing and procurement, what you're going to find is one of the earliest mentions of it is when they built the pyramids in Egypt thousands of years ago. That was manufacturing. Our economies have been based on manufacturing for the vast majority of human history. In the US, which I think has the highest proportion of services as part of the economy, services of all kinds only became larger than manufacturing in around 1932 or so, right? So about 100 years. It's relatively new. And so it's been established in manufacturing for a long time. And then it's also been established much more deeply in manufacturing because much more of what a manufacturing firm spends with third parties actually goes to the end product that the consumer experiences. I think the rates go as high as 80% of operating expense. So at a very fundamental level, the customers internally for sourcing and procurement within manufacturing and retail tend to be those who are in fact creating the products themselves. And it creates a much broader discipline because if you're going to put a product out there that has a third-party ingredient or a third-party component, you not only need to source that intelligently and make sure it meets your specifications, but it has to keep meeting your specifications all along the way. If you're a continuous improvement firm, that means you're going to be constantly tweaking the quality and seeking feedback from your consumers. And so there has to be a really tight connection between your direct spend vendors and your company. And sourcing and procurement sits right there. What's interesting is that is even bled into the indirect spend. We do a lot of work with Bain Consulting, and they made a very interesting observation. They said that when they are going through performance reviews with manufacturing and retail concerns, they're always much more robust than you see within service companies. And that's because the discipline that has been created around the quality of the direct spend bleeds over. And you can see why it would matter, right? I mean, there's a real cost to poor quality if you're working on direct spend. And so they've said, look, with service companies, typically it's just not as embedded. They do it because they have to. It's administrative. And so there's this long history in manufacturing companies of really being at the table and the work being critical to the success of the firm that we just haven't had in service companies. And we're relatively new. So that drives a lot of differences. I think probably most people who are listening to this, viewing it, who are in service companies will say we struggle to get a seat at the table. We struggle to really make a dent because we're not close enough. But there are some things that are changing that I think are really interesting. One is technology, right? We are seeing technology fully embedded as what the end consumer experience is more now than ever before. If you're a customer in banking, if you're a customer in insurance, and you go back 10, 20 years, your experience of the banking and insurance product were the people you engaged with, right? You went into a bank to make a deposit. Nowadays, it's a mobile app. It's a portal. In insurance, you're starting to see technologies getting embedded in our cars that are used to look at how quickly we brake. And so you're seeing much more technology built into and third-party technology built into that end product. So there's an emerging direct spend there. The second is human capital. All right, just like the raw material for, I don't know, building a house might be wood, the raw material in financial services is typically people. Historically, that has been primarily in the four walls of the firm, and so it's been HR's concern. But increasingly, because of advances in data, in technology, innovative areas that we need to get into, we're no longer able to do that. And in fact, we're seeing trends due to the aging population in the US and in Europe that we have to go to other countries anyway. And in many cases, the right model for doing that is via third parties. So that raw material now is starting to also move into sourcing and procurement's general traditional role of working with third parties on staff augmentation and outsourcing. And then finally, at least in insurance, we've kind of always had the ability to get a little bit closer to the end consumer because of the fact that we use vendors as part of our claims process. And indeed, if you look at the Progressives and the Geicos of the world, they have a pretty robust insurance sourcing and procurement department to do that. But net, when you look at these trends together, and there are others, you start to see that we in the services companies have the opportunity to, grow up and become that 17-year-old. But what I would say is that there are certain factors we need to keep in mind. One is it won't happen naturally, right? We don't have that long history of having a seat at the table. So we have to generate the interest. Many companies aren't going to naturally put us into discussions about things like ecosystems with third parties. But these are areas we can deliver value for our firms. They're exciting areas that will keep our people galvanized. We need to, get there. Now we have certain advantages. Services firms can leverage remote working a heck of a lot better than factories can, right? And so we have certain trends that work in our favor. But ultimately, I would say that there are some key differences in how it developed and whether or not we get on a trajectory, to be able to go to those R-rated movies like our older sibling, that's really going to be up to us.
I really enjoy that analogy, for the record. That's a very good way of phrasing it. I have an older brother, so I know all about that.
Yep.
But if we can dig into that gap that you spoke about between, say, services and the manufacturing world, what is the risk if services don't start to close that gap? What negative impacts could there be if that isn't done quickly or done well? And I guess a secondary question is, what if some services close that gap faster than others? What benefits could they have?
Sure, it's a great question. And the story isn't exactly written, but let's start with the basics, right? The basics are this, and I'll take the US as the example, right? You've got services as now, I think, 75% of our overall economy. Most firms will tell you that if you have an area of spend that you haven't really gotten involved in actively managing, and that's both the demand management side and the supply management side, you're looking at 10, 20% improvement in what you can deliver. And so that means that, 75% of a US economy, in other economies it's smaller, you're not really driving the efficiencies that you probably can do so. And I would say, wearing a nationalistic hat, if your suppliers are in other countries, it means you're effectively transferring wealth from your country to another one. I mean, that really is what it comes down to. So at the company level, there should be efficiencies to be gained if we can't really drive that seat at the table. I think there's also real concerns. And, when you think about what's going on with COVID, the war in Europe, inflation, the real concerns that we are not going to be able to demonstrate the leadership that our companies really need us to, in terms of making sure we've got the right risk profile around our vendors, and that can lead to all sorts of challenging situations. We're not going to have the right profile when it comes to acquiring the human capital we need, which means we will be slower to respond. And so overall, at a broader services level, you could see all of that being either good or bad, depending on whether you address it. To your question, it does start to bleed into competitive advantage. Right? At the end of the day, and I'll speak for insurance, right? Insurance is highly regulated. You can only charge so much for it. And your biggest cost is your loss cost. But in order to have any kind of profit margin, you have to be incredibly efficient at what you do. And so if you are not wringing all the efficiencies out, if you're not truly looking at the quality of the vendors supporting your claims process, then you may be able to compete for a while with other firms that are doing that really, really well. But ultimately, it erodes your profit margins and you are unable to reinvest. And what we're seeing, at least in insurance, but from my recollection from my banking days in banking as well, is the need to invest at scale in technology solutions, the need to have money available for innovation, those are incredibly necessary for competition. So it is a few
and it's
steps
investing
away,
from a position of strength as well.
Yeah.
Yeah. Absolutely. Now, Peter, one thing you did start to touch on were recent events there, and that's exactly where I wanted to go next with things like COVID, the war in Europe, inflation, recession. Do you feel that's worked for or against the procurement discipline in insurance and in financial services?
I'm laughing because I'm going to give an answer that my wife absolutely hates, which is it depends.
I won't tell her, don't worry.
Right? I mean, it depends. So I'm sort of a glass half full kind of person. So generally speaking, I'm going to look at the positives. But I think to do that, we got to divide this into a couple of different buckets. We've got what I will call some short-term issues and some longer-term systemic issues. Now, the short-term issues themselves still may take a couple of years to get through. But for me, things like inflation and recession, I have a certain amount of faith that world governments, central banks have learned versus, say, 100 years ago, how to manage that. And so there is absolutely pain, right? When we think about inflation, US and Europe are averaging between 5 and 10%, depending on where you are, and in some places quite higher. And those are driven by a variety of factors we won't go into, but it definitely raises the possibility of tipping into recession. Now, on the one hand, all of that tends to play into the strengths where people turn to procurement and say, we need you to save 15, 20, 30%, or at least offset the impact of inflation. So the spotlight shines on us. But to me, that's sort of a neutral, right? Yes, we can deliver. We can use the standard tools we've always used, right? We can consolidate suppliers. We can lock into long-term contracts. If we've got the buy-in, we can really pull those demand management levers. But I don't know that coming out of that, we're in dramatically a different place than we were yesterday. But if I look at the other trends, I think there's more of a tailwind if you can jump on it. Notably, labor market shortages, right? One of the reasons we are seeing inflation is that there simply is massive upward pressure on labor rates. In the US, I think it's something like 2 job openings for every job seeker. But this isn't a passing blip, right? We've seen this coming for years. We have aging populations in most established economies. And so you're going to see this problem. Now, the implication for sourcing and procurement is, especially in services companies where you have mobility, we can look to countries that have exactly the opposite situation. A very well trod upon one is India, but it's a great example where you have a very young workforce that's looking for opportunities. Again, you can do that by creating captives, and so that isn't necessarily sourcing and procurement, but generally speaking, you're going to want to do that by accessing third parties of various kinds. So there's a chance to lead there and really help. The second area is geopolitical risk. When I was coming up in banking, it was always a huge topic, but then we've had about 15, 20 years of really unprecedented quiet. Now that we're back to a period where we're seeing substantial geopolitical risk, and by the way, I include hacking and information security as part of that. People are weaponizing that discipline. And so the need to really make sure you are managing the risks associated with your vendor portfolio very proactively, absolutely critical. And again, it's not something that many of our leaders have tons of experience with these days because it has been relatively calm. So it's an opportunity if you can do it right. Similarly, with regulatory pressures, the regulators have not been deaf to the situation. They are increasingly pushing on fourth-party risk, business continuity, information security, data privacy, and there is a nationalistic bent. A lot of it does come to data flows that go across national boundaries. Climate changes, right? How do you react to the fact that we're going to have more and more climate events? What is its impact on resilience? If you have, as ACSET does, ambitions to change the world and how it approaches climate, decarbonization, using your vendors to help push that position is a big deal. So all of these are major systemic trends that I think allow us to sort of shift into that, what I called earlier, the emerging direct, right? We can get ahead of this. Now, is it a positive or negative? Getting to your original question, why it depends. It really depends on whether or not you've got the foundation in place. There are many services companies where we just haven't taken the necessary steps to really put the technology in place, to put the relationships in place, to put the knowledge of external talent markets in place. Those things are necessary to do. If you have taken at least the fledgling steps there, then I think you have to organize yourselves around these, mitigate the short term, but really move into a leadership role in those long-term positions. And for those of you who are leading sourcing and procurement, that does entail some professional risk. It also entails upskilling our teams. Our teams may not be strong enough in technology, in change management to get them to think of us differently. but these are areas that we need to focus on. For those of you who aren't there yet, my advice would simply be pick your battles, right? We're going to obviously have to deal with the short-term pain, but pick one or two things among those longer trends where you really think you can shift the position of sourcing and procurement in your organization.
Now, what I'd like to move on to next, Peter, is I guess it's the elephant in the room in every interview at the moment when it comes to looking back on the impact of the pandemic, because in so many cases there was no playbook. Everyone has playbooks for things. If there's issues, there's problems, but this was so extreme. I don't think anyone really knew what to do. But for you, how has the disruption during the pandemic led insurers to maybe rethink their supply chains and where and how they go about supplying services?
Yeah, it's hard because this is a book still very much being written, right? We sort of struggled through the pandemic. I honestly think our firm did a good job because we've always had a great focus on business continuity. But the reality is, that we, like everybody else, were busy trying to get laptops to allow our workers to work remotely, so they didn't have to go out and have exposure and all the rest. Right? There were areas that we had missed. I think if you look at the root cause, part of it is that the nature of the threat has changed. Right? All of our and I think in financial services, it may well be that we have a deeper view on business continuity because most regulators really don't want to see their financial system go down during a crisis. So it's been an area of focus for a long time. But nonetheless, I would say we tended to focus, and most companies tend to focus on local threats. What if there's a bomb scare in a given place? What if that office goes down to a particular weather event? And we're starting to see that there's more of a regional, national, and even global view when you experience pandemics. And so what that does is it means that we need to look much more deeply into our supply chain. We can't solely stop with third parties. We've got to go to the fourth parties and see who they are reliant on. And some of that is obviously to make sure that we understand where those are. So we're not just looking at geopolitical risk in third parties, but who they rely on as well. We need to think about concentration risk again. I'm sure there are firms that still talk a lot about it. We usually thought about more as concentration risk in a given country or concentration risk with the given firm. Now, if you think about what we're trying to do with inflation, which is to consolidate our volumes with fewer firms to drive price advantage, this is a big risk, right? If you are very concentrated in a firm and they go down, you've got a problem. But we need to look at it more broadly again. So when we think about our supply chain, we've got to think about, we may have 3 or 4 different vendors, but if they all rely on the same technology company or the same data center company, and that goes down, all of our vendors potentially go down. So I say it's still being written because it is a very complicated topic. I think the real question for us is what changes have happened in the vendor base or are we expecting to happen? The first is immediate, right? We know there are going to be some countries that are just no-go territory right now. Some like Russia because we just don't want to do business there, although arguably even before what's going on, a lot of folks were a little reluctant to do business there. Others like Ukraine, where, for example, we see great Java development skills, we have to be a little leery of going into because it's going to be many years before that sorts itself out. And so there are going to be some countries we're not going to want to do business with if we can avoid it. In terms of the longer term, this is sort of what I know and what I suspect. What I know. We want our vendors to be much more transparent with us than we probably did in the past. I'll use the pandemic, which you raised, Neil, as an example, right? We were talking to our vendors about how many of their employees had COVID or didn't have COVID, where they were concentrated, could they get masks, did they have sufficient laptops, and if they didn't, what was their supply chain to get laptops? And so as we look at our vendor base, we are looking at vendors who are willing to be fully transparent with us, not just give us the old song and dance, but really talk to us as partners about what we need to know.
How difficult is that,
yeah.
though? Because I guess with a organization the size of AXA, you've got people coming to you and they're getting the bunting out. They're getting the best plates out for you when it comes to those conversations. How do you get that honesty from people when they know that you are such a significant client?
So, like anything else, it happens over time, which is, one, you have to be very clear about what you were looking for, and there has to be a culture of no blame, right? If a given vendor is unable to get laptops so their people can work at home, you can't then say, well, we're going to cut your contract. Otherwise, no one's ever going to divulge anything to you. And so this is what I say over time: when the bad comes, you've got to be ready to react as a true partner if you want them to be a true partner. The second way is that you have to be managing that relationship cycle. And we talk about how in manufacturing concerns, the ability to really look at quality as part of your supplier relationship management program, we don't have that as much. And we really are going to need to start developing that a bit, because if they're not being honest and you're not managing it, you can't see the blips. And so they have very little incentive to go to being honest because you can't catch them. And you never want to monitor everything, but especially at heightened periods, you've got to make sure you're taking the time to look. But it gets to the last point I was going to make, which is what I suspect. So different firms have very, very different profiles. Some are a single country and they can really drive scale. We operate in 20, 30 countries around the world. And so where we are looking for, services for the office, where we are looking for claims support, we sometimes are dealing with really, really, really small vendors because they're just who there is in that country. And my observation would be that I suspect we're going to see roll-ups in the vendor community. It is very hard for small vendors to do the things necessary to satisfy financial services companies in an increasing focus on the regulatory environment. There's just a lot of investment they have to go into to make sure their systems are secure and to demonstrate it, to make sure that they have a good handle on their supply base and they can demonstrate it. If you're a small firm, you're not really going to be able to push your own vendor base very far. And so I don't know by any means, but I have a sneaking suspicion that what we will see in the coming years is a bit of a roll up in some of these critical vendor areas, because it's going to be honestly too hard to meet our requirements otherwise.
I'm getting conscious of the time because I've taken you on a couple of tangents, Peter. So I do apologise. So we'll push on to some other areas I did want to look into. And the next bit is a good bit of advice, really, for any financial leaders. How can they effectively navigate the whole myriad of complexities of regulations, laws, and governance in their supply chains?
So there are a lot of ways I could go with that question. I think where I'm going to go is my favorite question, which is, how do we keep procurement from being the bad guy? So, in the vein of something can be either good or bad, there's that old quote in Hamlet, nothing can be good or bad, but thinking makes it so, right? We have used within AXXL the need to understand your vendor base, the risk associated with it, as a way to get people to come to us. But there's a risk to that, right? The risk is that we're just the bad guy, right? We are there to make sure that it passes the information security assessments, that the geopolitical risk is right, the financial health is right. And no procurement department is ever going to be successful if they're seen as the bad guys. So what do we need to do, right? We are basically there owning the end-to-end processes around vendors, and we need to have a balancing act. We are there to be an ally to the control functions: information security, data privacy, ops resilience, legal. But on the flip side, what we have to avoid forgetting, which is very easy to do, is that we need to be an ally to the business as well. And so we need to help the organization find the right risk reward, because you simply can't control everything. So as we were putting our framework in, there are a few things we thought about. First and foremost is you've got to know what your target is, right? If someone said to you, I want you to hit that target down the way, here's a bow and arrow, and I'm going to blindfold you, chances are good you're not hitting it, right? So the first thing is you have to really understand, and this takes time as a procurement department, to work with all of your control stakeholders and understand what are truly rules. You have no choice, you have to apply them, versus what are guidelines, right? A business can choose to adopt a riskier stance if they want, because oftentimes being really tight on your risk also means spending more money on assessments, spending more money on monitoring, and going more slowly. And the business may not want that. So you really need to understand what is the target and what are your degrees of freedom around the target. Then you have to make sure you're fostering meaningful conversations with your organization about your risk tolerance. How much is it worth to you? And once you have that in place, you can then stitch that together into an actual risk framework. And this matters because once you have a risk framework, it lays out the expectations. You can then measure, you can be transparent around that. And then procurement doesn't have to be the bad guy, right? They're there to help the business navigate what is a complicated and important topic. You need to get to that sweet spot. And then finally, you need to communicate and monitor. if sourcing and procurement has to be the one who is always complaining, oh, so-and-so didn't follow the necessary processes, oh, so-and-so didn't that, you're not taken seriously. But if you have developed the right KPIs and you're simply sharing a report that says, here's our risk profile, we as an organization decided we care about these things and we either are or are not doing it, then it's a much more systemic way to stay on top of that. And I think it's something that is very important when you're trying to drive a change in behavior, is that there is a constant view as to whether you're getting there or not. For anybody who's played golf, it's pretty clear when you hit a bad shot. It tells you what to work on. And so we need that measurement to show that there's going to be a bad shot. So I just think that's really where it is. The problems, to deal with your question more specifically than guidelines, the regulatory frameworks vary so much country to country. They vary so much industry to industry. It's really those things that are most important, though, right? In sourcing and procurement, you've got to be willing to take that kind of leadership role, because there's a wonderful quote from an old movie from Jack Nicholson. You want me on that wall, right? You want me managing your risk. We want information security professionals to love their profession and to want us to have zero risk, but it's not always possible. And the business has a say also, and we're there to help keep it balanced.
I think we've just gone from Shakespeare to A Few Good Men there, so I didn't expect
Thank you. That was the movie name.
That was the movie. We've gone from both one to the other there. One thing we have touched on a fair amount at different times during our conversation is technology and how that's changing the procurement landscape in the insurance industry. How do you think technology is doing that at the moment?
So I have two different areas of answers, and I'll try to go quickly because I know time is getting short. The first one is not probably what you're asking, but I think it's really important, which is technology as a category of spend. And I've alluded to this a few times. Technology used to be its own very specific category of spend, and there wasn't a ton of overlap to other things. When people needed something, they came to technology. If technology needed third-party support, they engaged their procurement organization. But what's happening now is the lines are blurring, right? We can have consulting engagements come in that have a big technology component, training things from HR that have a big technology component. And this opens us up to a lot of risk, right? If we don't make sure that the sourcing and procurement people on point who have knowledge of the HR domain also know enough about technology, we could be missing data privacy issues, insurance security issues, regulatory issues. And so I think it's really important in terms of thinking about sourcing and procurement that we start to blur the lines of our technology sourcing with a lot of the other disciplines. We have to upskill the other disciplines. You can't just throw it over the wall anymore. It's a bad user experience, and it does create a lot of risk. And by the way, it also puts us again into that bad guy position. Oh, I'm sorry, HR, we've got to move more slowly because of technology. It just doesn't fly, right? People are looking for sourcing and procurement to understand all of the issues of getting their vendor on board and managing their vendor performance. So to me, that is a fundamental change in terms of how we look at these categories. And there are a variety of ways to solve it. But for us, that's one we really are looking at, how to make sure that technology as a capability is threaded across our firm. The second one, which is probably the more traditional question, is with digitization, with advanced analytics, with machine learning, how is that changing? And what it should be doing, right? What it should be doing is freeing up our people to add value to the business. They shouldn't have to try to match up invoices with purchasing intent. You should have a PO system that makes that easy. You shouldn't have to go in on a search for your contracts every time a regulator has a question, because at a minimum, you should have a contract management system. But at a maximum, there should be computable contracts that allow you to pull the contracts in question easily, and so on. That's what it should be doing. What it is doing, honestly, my sense is it's probably developing a lot of frustration for people because several reasons. One, I had the good fortune of running a technology unit before I was doing this. And before that, I built up a continuous improvement program, which is all about process. And when you look at it, technology, when you're really developing new things, will always fail if there isn't a good process behind it. And we tend to jump right to technology. So that's one of the problems I think we have. I think we try to automate things we don't fully understand. The second problem we have is that rarely do we have the business case to really justify the full suite of capabilities. It's hard to justify workflow in core businesses, much less in procurement. And so we end up with sort of a mismatched set of things. So I do think that technology can deliver those capabilities and can move things along, and we will start to get the better analytics to identify the opportunities, but it's in a very different model. And that model is technology with a small t. It's a version of Agile right now. And what we're really focusing on is in creating an organizational capability to really identify and prioritize the changes we need to see. Because we're going to have to constantly be making changes, not that one big bang of putting a new system in. Two, we need to get organized around our processes. Because again, once you have a good process, first, the user experience will be better. Chances are good you won't need to automate as much. And so you'll be able to use the really cool off-the-shelf technologies that are still there. To me, the technology revolution isn't as much about all this massive technology that can be brought to bear. It's about how simple tools like SharePoint can now mimic workflow. They can mimic basic database capabilities, things we can program ourselves. We don't have to engage our technology team with. And so we can get into that continuous cycle. Obviously, we need to leverage technology where we can for core components, contract management, data analytics, and so on. But for me, when we really think about freeing up our resources to add value, it's going to be a much more dynamic process of reacting to what the business needs in a much more agile way.
And Peter, we are basically out of time, but I'll just do one final question, which I do think rounds us off very nicely and takes us pretty much back to where we began. And that's, do you see sourcing and procurement in financial services really evolving to be the same as in other industries over time?
Yeah. So as you can tell, I am bullish, right? I'm going to be a glass half full person probably till the day I die. I do think that when we talk, and I'll be quick, I promise. I do think that when we talk about a seat at the table, we can get it. It's not going to be natural. We're going to have to do heavy lifting and really get good at change management and influence to get there. But I do think we can get there. And to the very intelligent question you asked, I think there are important benefits to our firm for getting there. This can be a competitive advantage, but it really is up to us to demonstrate that.
Yeah, all about the benefits. Anyway, that is all the time we've had. We could carry on, I'm sure, but I best wrap things up because we have other people waiting to play on the virtual stage. That is all the time we have for now. My thanks again to Peter for joining us today on the FinTech Live virtual stage.